Hello, this is Dr. Paul Cottrell, and I'm recording this on 3/8/2026. The markets haven't opened up for Monday, New York time. This is Sunday. I'm going to be briefly giving you an update of the markets, where I think it's heading, and how it pertains to the news related to the Iran war. But before we do, please help support the work that I do by making sure that you subscribe to all my channels. I have YouTube, Brighteon, Bitchute, and Rumble. You can follow me on X, GETTR, also on Substack, TikTok, Podomatic, Apple Podcast. You can also watch my live streams under broadcast on my website, the-studio-reykjavik.com. You can watch the live versions of my show. You can listen to the audio archives under radio, and paper is news that's generated dealing with summary of what may be happening for that day or the day before. So with that, please go to my store, the-studio-reykjavik.com, and take a look at the broadcast section of the website. You can also donate on my website through Stripe, PayPal, or buy me a coffee. Just click the link here and you can donate. And that helps support the work that I do. All this is for free, so please help support the work that I do. In addition, I have a store. You can get ebooks. I have 8 ebooks dealing with finance. Some of it's dealing with medicine and also artificial intelligence. So take a look at those. I also have supplements. So let me go over briefly on the supplements that I offer on my store. You can get the Structural Nano Silver toothpaste. This will whiten your teeth, freshen your breath, neutralize. By using this toothpaste, you're going to be able to improve your oral cavity, but also prevent, through good oral hygiene, you're going to be able to prevent cardiovascular disease and valvular disease. A lot of people don't realize that cardiovascular disease can be exacerbated or started with poor oral hygiene. Max 35, Max 14, or Cleanse, they're all at different parts per million, 35 parts per million for Max 35, Max 14, 14 parts per million, and Cleanse 30 parts per million. They're all at different price points, but get either of them. You take a teaspoon a day every day, swish in your mouth, gargle about 20 seconds, and this will help to improve your immune system and neutralize. Really important to do this every day. If you're not feeling well, take a tablespoon or two a day. The structural nano silver, there's 2 types. You can get it in the tube form or in the quick dispenser form. And as Renew, they work the same way. They help to heal a wound, an abrasion, a minor burn much quicker. You can apply it on your skin daily to improve the health of your skin. And if you're not feeling well, you can put it on your hands, around your mouth, around your eyes, around your ears, around your nose. Lightly coat your nostrils, and it'll stay active for 5.5 hours. Really important, especially during the cold season. If you're not feeling well, make sure that you start using the structural nano silver gel. I have 2 soaps and 2 variants of the soaps for the structural nano silver in stock. You can get the lemongrass version or the peppermint structural nano silver soap. I also have drops and lozenges. You can get it in blueberry, honey and lemon, and cherry for the drops. And for the lozenges, you can get it in Manuka honey and also in vitamin C orange splash. It's really important to take the drops and the lozenges during the cold season and the allergy season. I have a Digest probiotic, really high quality probiotic that's VeggieCap. It's really important to take a probiotic every day to improve your gut biome, bring down inflammation, boost up that immune system, and improve brain function and cellular metabolism. And I also have a multivitamin. This multivitamin has the multivitamins that you need, like vitamin A, vitamin C, D3, vitamin E, B1, B2, B3, B6, folate, vitamin B12, and biotin, and many others. So this is a very easy to digest multivitamin. So please go to my store and take that multivitamin daily. I also have C60. C60 is a very strong, very potent antioxidant. It's going to soak up free radicals. And by soaking up free radicals, you're bringing down inflammation. You're improving your ATP. You're improving the health of your mitochondria. And you're going to be able to improve your endocrine system, your immune system, your brain function, your cardiovascular system. Really important. Even your skin will improve by taking C60. Take a teaspoon a day every day. You can get it in extra virgin olive oil, avocado oil, or MCT coconut oil. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It is cheaper to buy the higher ounce configuration because it's cheaper per ounce. Now, you can get vitamin D3, super important to take every day. This is a gene expression cofactor. It also helps to get cells to go into apoptosis if they're infected. It helps to improve bone density and also cardiovascular health. Vitamin C and magnesium improves your immune system, your brain function, and skin. Omega-3 helps with your cardiovascular health. Ashwagandha root helps to lower your cortisol levels and improve your cardiovascular health. It stacks really well with turmeric and lignans. And ashwagandha root can also help to improve your blood glucose levels. Goodnight formula has tryptophan, melatonin, GABA, and passion flower, so you can get into 3 to 5 cycles of REM sleep and deep sleep, so you're consolidating memory, detoxifying your central nervous system, and you're going to be well rested. Good sleep slows down the aging process. This probiotic that I'm showing on the screen here is a powdered version. It's very important to take a probiotic every day. I prefer to take the powdered probiotics, but you can also take the VeggieCap version. Resveratrol soaks up free radicals, gets rid of senesced cells, helps with youthful gene expression, helps to improve the basal layer of your skin. But also, by taking this every day, you're slowing down the aging process. It stacks really well with C60. Vitamin B complex is great for individuals that are 40 years of age or older. It has the B vitamins that you need to boost up your energy levels, improve the health of your mitochondria, improve cellular metabolism, and to protect your neurons. Turmeric brings down inflammation, soaks up free radicals. This is really important for your immune system, your cardiovascular system, and brain function. Magnesium and zinc boosts up the immune system and helps with brain function. Lignans helps with your immune system, your endocrine system, soaks up free radicals because it's an antioxidant, and it will help with brain function. Collagen, really important to take for your skin, your hair, your nails. It also improves your joints, your bone density, and musculature. Digestive enzyme complex helps to break up carbohydrates, proteins, and lipids to reduce the load on your pancreas. Clarity factor gets rid of brain fog and allows you to concentrate. By taking clarity factor regularly, you're going to improve the dendritic connections of your neurons. You will be thinking faster, you will have better memory, and you will have better brain function. Olive leaf extract, really important to bring down inflammation and control your LDL levels. And by doing that, you're improving your immune system and your cardiovascular system. Zeolite gets rid of heavy metals, toxins, and chemicals. And by doing that, you're improving your immune system, your endocrine system, and your cellular metabolism. Myotrol helps with the gene expression to build muscle and to maintain muscle. Really important to take after you turn age 40. By taking by taking Myotrol every day and doing some resistance training, you're reducing atrophy and you're building muscle. Really important. You can also take Myotrol if you're an athlete, younger or older, to help with your strengthening for your sport. Boomer Boost. Boomer Boost has 68 nutrients, has a very comprehensive nutrient profile shown on the screen here. I'm not going to go over it, but it's pretty comprehensive. It's a great way to slow down the aging process. Here's just a few things that it helps with immediate benefits and long-term benefits. In terms of immediate benefits, it replenishes essential nutrients, provides for advanced energy production, fights free radicals, boosts metabolism, elevates vitality. Long-term benefits, supports heart and cardiovascular health, increases muscle strength, promotes healthy cellular regeneration, optimizes brain function, encourages the anti-aging process. It's a very powerful supplement to take every day. Gladiator barley and heirloom barley, they are micronutrient barleys that you can't get at a regular store, and it'll help to detoxify your body, reduce inflammation, soak up free radicals. Now, Gladiator barley does one additional benefit that heirloom barley doesn't do, and it also helps with strength. It stacks really well with Myotrol, and you can take Gladiator barley or heirloom barley separately or either one with the Boomer Boost. To stack it, you'll be able to control your A1C levels better. It's a great way to get healthy and improve your immune system, endocrine system. And by bringing down inflammation, you're also improving brain function. Collagen. Collagen is a great supplement to help to rebuild your joints. All right. And what it does is it revitalizes your cartilage using type 2 collagen, and that will help with the actual cartilage. And then ACAN will also help with the cushioning of the joint. But collagen also helps to bring down inflammation. All right. And what it does is it's blocking the enzymes that cause chronic pain and damage to the joint by blocking MMP3 and MMP13, and also blocking EP4. Now, another thing that it helps with, not just restoring the collagen and the cushioning and blocking the pain channels, all right, and halting the joint rust that's taking place in the joint, but it's also helping to utilize glucosamine and chondroitin to remodel and to help with the joint. Glucosamine is going to help with the cartilage, and chondroitin is going to help with the cushioning. It's a great supplement if you're having joint pain, either because of getting older or because of a sports injury. All right. And another great supplement or great product that I have that's new on the store is Super Strong Relief. This is a topical agent that you apply to muscles, to the temple of your forehead or the neck. If you have a headache, if you have arthritis, apply it to the area of the joint that's causing the arthritis. It's a great way to have some temporary relief, quick temporary relief of pain. So for sore muscles, for headaches, for joint pain, try Super Strong Relief. Okay. And I have several anti-aging boxes that are in stock. and take a look at those. These are curated. Some of them are sold out, but many of them are not. But they are curated anti-aging boxes that allows you to start on your anti-aging journey, but you can purchase any of the products separately. I also have classes on pulmonology and immunology. You learn a lot about those subject matters, and it's only for $25. You get lots of videos, lots of PDFs. You can watch as many times as you want. Once you sign up, you get a unique password and you can log in under classes and type in your password and learn about these different subject matters that are on the screen here. And the same thing with immunology. It's only $25. You get lots of PDFs, lots of videos, and you learn quite a bit of information. So with that, please go to my store, the-studio-reykjavik.com, and get the the products that I offer and slow down the aging process. Okay, now with that, I want to show you what's going on in the market. Okay. Now, for the S&P 500, you can purchase into the index using SPY as the ETF. So, what I have here is a Fibonacci sequence, retracement, fib retracement, starting at the low point of last year of April up to the high point of 697. Now, for the S&P 500 index, you just add another zero. So the high point was 6,670 roughly. Okay? Now, we can see here that obviously during, February or so, we started having some issues with Iran. It was February 28th. So near the end of February, and you can see it started to sell off, and we broke the 680 mark, right? And now we're trading at 672. All right. We have a strong support level at 645. So yes, the war can continue, but there's a very strong support level at 645. I recommend that you continue to buy into the equity market. Stay away from individual stocks. I think buying in a broad index like the SPY or Russell ETFs. Now you can, also, take a look at some other broad indexes, but I really think that it's important to start purchasing as the market is going through a little bit of a sell-off during the war in Iran. The war in Iran is going to be one in our favor, and the equity market is going to rally. So it's better to start buying when it's selling off and be able to get that increase. Now, I have a target of 740 to 780 by year end for the S&P 500 for SPY. All right. So that means for the S&P 500 index, 7,400 to 7,800. So there's a major resistance level at 700. There's going to be a support level at 660 for the S&P 500 near term. There's a very strong, because of the fib sequence, a very strong support level at 645. And most likely it will not break 645. And it may continue to sell off a little bit, but there's going to be a decent support level at 660. One reason it's, a round number, and it's within the 0 to 23% retracement. So 660 support level, 645 major support level because of the fib sequence. going off of the low of April when during that tariff issue that we had last year. Okay, next, oil. Oil is, it's very difficult. It's really predicated on will the oil refineries stay operational? Will they be hit? Will they have damage? Are they just going to be shut down? Will the Strait of Hormuz stay open? Will If the Strait of Hormuz is open and there's no issue with Iran blowing up tankers or seizing the tankers, will these tankers be insured? Will there be escorts by the Navy? Many experts that are dealing with shipping are saying that the United States Navy isn't large enough to escort so many of these tankers. So the Strait of Hormuz is really important to understand where the direction of oil is. Now, I trade oil all the time, and there's no real, we're in uncharted territory here and where this can go. All right. Now, you can see that normal trading range was for the beginning of the year, normal trading range, average was probably around, $63 a barrel or something like that. All right. About roughly for the year, for this year. All right. Last year, the trading range was a little lower. It was trading a little bit more into the 50 range, 50 handle range. Now, you can see that we have a huge gap up. Okay. Now, what's really interesting here is that as we zoom in here, okay, when this was moving upward, in the future, there was going to be a gap up. Okay. Now, all I did was take the low. This is the reason why the fib sequence is so uncanny. You take the low of last year, 54.98. So this is WTI. So $54.98 per barrel for West Texas Intermediate. And you take the high point of the last week, 92.61. It closed at 91.27. All right. And when you do that, it just so happens that 61% retracement, the 61.8% retracement of the fib sequence is where that gap up starts. Okay, you have the gap. It gaps, you have it the previous day and it gaps up. All right. And the whisker, the very bottom of the whisker of that next day trade is at the 61.8. Now you have to remember that wouldn't have come to fruition, right? You wouldn't know that would happen when we do the fib sequence, let's say right here, right? And let's say the the data, the last trading day was, let's say, right here, right? So I am starting to think that because we have this gap up that's tied to a golden ratio, right? Or the mechanics of a golden ratio, let me take one step back here to explain something here. The fib sequence is a mathematical sequence that models many chaotic systems, social systems, even the universe. Many things in nature and in social systems can be modeled using a Fibonacci sequence of some type. And there are patterns that build up. Human behavior is a fib sequence. since the markets are human behavior, should be able to model markets and get some sort of idea of what's happening here. Now, if the market keeps on going up, then we're going to lose this unique lineup of this whisker of this candle, this trade. I'm not sure what day it was. And all right, so this is Friday, Thursday, Wednesday, Tuesday, Monday. So this is Monday. So last Monday, all right. If it keeps on going up beyond the 62.61, then we'll lose that alignment. All right. But this might be an important feature to understand. So we can look at this and say, you know what? If there's nothing really major in terms of slowing down the flow of oil to the countries that need it, we may have seen the peak because of this interesting alignment. When price curves align nicely with a fib sequence, some dynamics like this gap up, that's telling us something. All right. Now, so have we seen the peak? Maybe. It's gone up pretty fast. Now, you also want to take a look at, there's an awful lot of volume interest going into it, and also it's oversold. This is the relative strength index, right? The RSI. And when it's above 70, it's oversold. All right. And if it's below 30, it's I'm sorry. Let me repeat that. If it's above 70, it is overbought. If it's below 30, it's oversold. So here, let's take a look at this dynamic here. So it's above 70. This is overbought. Okay. And this aligns, you had a lot of peak interest. This aligns with elevated price here, right? And this was taking place last year, mid-June. Okay. And then all of a sudden, boom, sells off. This is a signal that usually it's a sell-off. Now, what happened here was us bombing Iran, those nuclear facilities with B-2s. And right after, it sold off really quick. There is a high probability, there's more probability that oil is going to go down than up, is my main point when you look at the RSI. All right, same dynamic. Lots of volume, signal, overbought, and then collapse of the price. And it collapses within 2 days. You have a very high overbought condition and lots of volume. And right? Lots of volume. Now, what's interesting here is that you have, take a look at this dynamic here. This is the open interest, and this is the volume. All right. And as it's going up, there's lots of interest, and then there's lots of volume, and then the open interest starts to go down. All right. Right after that first big wave of interest big wave of volume trading. And the open interest goes down. And then it comes back up. And you notice that there's this wave pattern here. Okay. And we have open interest. And usually they're peaking at about the same level. All right. So open interest is going to go down. It looks like open interest can go down a little bit more with these. All right. And you can see here, you had volume go up, the open interest started to decline. And then the volume started to gain momentum. The volume started to gain momentum. Open interest started to increase, and then volume started to go down, and then it started to decline. Okay, so that decline, that peak, that trough for open interest doesn't seem to have, it hasn't happened yet. So that suggests that there may be a little bit more of an increase, maybe to 95. All right. So I'm trying to show you that indicators aren't going to be 100% where things are going to go. You may find things that are going to be going against your original thesis. The original thesis is that RSI is saying overbought, way overbought. Volume is high, but open interest hasn't reached its complete um, trough yet, where that sell-off would take place. All right. So there may be a little bit more to go, maybe 95, maybe 98. Some people are saying 100 to 120, but that would mean that this is, elevated quite a bit. And that would also mean that the Strait of Hormuz is closed. If the Strait of Hormuz opens up and there's a decent flow of tankers, this is going to collapse down to 70 and in the 60 range pretty fast. And you're talking about maybe within 3 to 4 days, maybe 1 week, it's going to collapse pretty quick. So be careful. It could go up, but it could also go down rapidly once the strait opens up with the tankers. Okay. Now, if you have facilities getting blown up or countries shutting down production like Kuwait and Qatar, I think it's Qatar. I think it's Kuwait and no, UAE. I think they're shutting down production. Well, that's going to be problematic. The headline news would say, well, that means that they're cutting production and therefore oil should go up. That's the knee-jerk reaction. But the reality of the situation is that they can't pump much more oil because they've already filled up the above storage tankers, above ground storage tankers. And they can't pump any more oil and store it because they can't put it on a ship. There's not enough ships out there to put it because the Strait of Hormuz is closed. So there's a lot of oil out there above ground in storage tankers, on tankers that can't get through the strait. And there is a lot of oil in other countries in their inventory. So, what does this mean? Well, oil can go up, but oil could also go down, and it's heavily event risk. This is not easy to trade. Now, you can take a look at the UCO or the SCO ETFs. UCO will long oil, it's leveraged, and SCO will short oil leverage. Now, in cases like this, you want to hedge. That means a little bit of a little bit of long oil, a little bit of short oil. In the long term, meaning probably within the next 4 weeks, there's higher probability of oil going down than up. But in the next 2 weeks, it it, it could it could be 50-50. It could go up, it could go down. We don't know. So it's going to be heavily predicated on what's going on with the flow in the strait. Now, can the flow in the strait increase within the next 2 weeks? I would think so, but I don't hear that being telegraphed by the administration that well. And Besant on Friday or Saturday mentioned that They were going to remove sanctions so India can buy Russian oil. Well, that means that Russia is getting money for their war effort in Ukraine. And if the strait was going to open up quickly, why would Besant say that? So here's another data point that suggests that maybe the strait is going to be closed for the next 2 weeks. If that's the case, then oil is going to go up. And if that's the case, that you can kind of see the open interest, right, before it starts to go down, you may actually it may actually go up. That open interest is starting to drift down, right? And you still this might kind of for the next couple trading sessions, maybe a week or so, stay, above 80, and then all of a sudden start to drift down and then pass the 70 and drop down pretty quick. You know, when it breaks fast. Right? So this is not easy to trade. I mean, you would think, oh, just buy. Well, it could go down fast. And then you can lose a lot of money if you don't time it right. So it's very heavy risk. And if you're longing oil, be super careful because you could lose a lot of money. If you're shorting, you got to be patient because it will come down. Now, when? Who knows? 4 weeks? Probably. 2 weeks? Maybe. All right. So there's this is we're at a anything can happen range. It's not so simple to say, oh, oil's just going to go up. May not. And I find that this pattern here, this whisker from this Monday trading day coincides perfectly with the 61% retracement of the fib sequence. So there's a mathematical alignment that's taking place with the price curve. You got to be very careful when you see that. Very careful. Because I think the next major alignment, if price continues to go up, would be the 68% retracement starting on the big this Friday candle, which is huge. All right. And for that to happen, you're talking 110, maybe $120 barrel oil for that to happen. It looks like it would have to be close. It would probably be in the 110 range for it to align, where the bottom of the candle, the bottom of the whisker of the Friday candle, last Friday's candle, would align with the 61% retracement. So you just maybe even more, maybe 115, 120, somewhere in there. So it's either we're near the peak or this thing's going to 115. But it's heavily predicated on the flow of tankers through the Strait of Hormuz. Okay. So hopefully you paying attention to that. Now, natural gas. Natural gas is a little different. Now, yes, natural gas and LNG production is being affected by the strait. Oil is the bigger move in the futures market. Weather is starting to improve so that people that will need natural gas will start to go down for heating. Now, natural gas is trading at 3.182. If it wasn't for the war, it probably would be trading probably, well, last year at about this time, it was trading around 4. All right. Now, AI also is using energy, so that's using some of it is using natural gas. A lot of people don't realize that the feedstocks for most of the energy sector is natural gas or coal. Now, could natural gas continue to go up? Yes, but I would say that it's going to be probably trading in the probably the 3.2 to 3 range for a little while. I don't think it's going to spike up. Now you have to remember here, early February, late February, it was dropping down. Then when we went into March, then it started to creep back up. So it was trading at like 2.8, and then now it's trading at 3.1. It technically it should be trading down. You notice that like in March, it normally is trading down, 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 right? And so when you get into May, when you get into April, now last year's April was unique because of the tariff issue, and then it started to creep back up. But usually April, May, June, those are lower contract price for natural gas. So it could be creeping, it could creep back up. Now let's take a look at what was going on with the tariff issue. Now with April, the tariff issue came out and it started selling off. And then when May came on, it started to come back up. Now, if you take a look at oil in in March or in April, in April, where's April? Okay, April, the tariffs came in and oil did sell off. Okay, so oil and natural gas sold off during the beginnings of the tariff negotiations. All right. And then it sideways, and then the war in Iran really cranked it up for oil. So in mid-June, the bombings. All right. So mid-June here, this is the pulse from the bombings. So if we take a look at this dynamic, you had a little bit of a gap up, came up. It was 3, 4 days, and then came back down pretty quickly. So the worry, if you take a look at the left side of this, the worry, some of those prices, the price range. All right. So you had a pretty decent candle on the second day. You had a big gap up, and then decent candle, another decent candle size. You go over here, and what's going on here? All right, the end of February, then March comes in, and these candles are bigger. They're actually a little bit more volatile because the higher there's more whiskers to it. So the trading is more volatile. So natural gas could continue to go up. But now what I've been noticing, because I had long and short positions, is that I was able to close out a decent sized long position because of this dynamic. Now the question is will it continue to go up? Natural gas may continue to go up, even though consumer usage should be going down. This is another one of those situations. It's like, what is it going to do? Normally, it would go down, but it could continue to go up. I mean, there's some decent sized candles here. Even during, see that? This is a decent sized candle, but short width, right? These are small, right? These are a decent size, and the sell off after the bombing of the nuclear facilities and natural gas, those are big candles. So natural gas should sell off pretty hard if we hear that the strait is opened up. But you also have, big candles with large whiskers. There's some volatility going on here. And it's been creeping up, so it's probably going to stay above 3. Three is probably the support level, and it's going to probably trade in a range of 3 to 3.2. I don't think it's going to get up to 3.5, 3.6 for natural gas. Now, let's go to the belly of the curve, the 7 and 10 year Treasury. Now, this is an ETF, TYD, that tracks that 7 to 10 year belly of the curve. All right. And let's take a look at this. This is interesting. At the very end of the month, right? The last trading day of the month, there was a big gap up, and this was when we hit. So bonds rallied, yields went down, and then as we moved into March, bonds started to sell off and yields started to go up. And I believe the 10 year now is trading at 4.2. Let me double check here. But I think it closed at 4.2 for the 10 year. 10 year, 4.13. So now it's interesting here that last trading day, last Friday, it bounced right off of the 25.41 retracement line, which is the 38% retracement line, going from the high to low price range of a year. Okay. So it was at a high of 27.3 for this ETF for the belly of the curve for Treasuries and 23.42. TYD is longing the bond market. So if the bond market rallies in price, this will go up and yields will go down. Okay. Now, so we're seeing here that there was a rally right when the bombing started, but then subsequent trading sessions, it started going down and yields started going up, probably because the worry of inflation due to oil. So as the yields go up, inflation expectations going up, bond price is going down. Now, I just find it really interesting that it bounced right off of the 23.41 level. Okay. So I'm sorry, not 23, 25.41 level. So 25.5 is a major is a support level for TYD for the belly of the curve. All right. So keep that in mind. So that we may actually see yields potentially going down and bond prices going up for the 10 year. Now 4.13 for the 10 year is a little too high. It should be below 4. But it's all predicated on what happens in the Strait of Hormuz. If oil flows, bond prices are going to rally. All right. And the reason being is that inflation expectations are going to go down. Now, VIX. VIX is a measure of risk for the equity market, for the S&P 500. All right. And risk usually spikes and then comes back down really quick. It's called heteroscedastic. All right. And there's a periodicity. You can see that there's spikes and then it comes down, spikes and it comes back down. So there's these waves of spikes, right? And sometimes it's a month, sometimes it's 2 month wave, right? And you also want to look at peaks. From previous peak to the next peak, is it declining or increasing? And here, spike, this is all the beginning of this year, before the war in January. Spike, beginning of February spike, but it was going up. And then there was a little bit of another spike mid-February, but it was going down. And then all of a sudden the war happens and there's big spike and big spike. And right now it's trading at 29.49. This type of movement upward, right? You can kind of see peak here. And then the next big peak is higher. And then the next is pretty large. If we see And of course, this was tariff related. If we see, and this level here is very similar to March before the tariff news, all right? If we see bad news and the Strait of Hormuz isn't opening up in the next 2 to 4 weeks, we may see another 60 VIX or 50 VIX. Could be really high. And the thing is that we're looking at in 2024, there was a 65. This was in August, roughly. The next peak, because of tariffs of last year, that peaked at around 60. All right. This next big peak, if we wanted to draw a straight line, right, to it, that is probably going to get to about 45. Maybe 45. Around 45, maybe between 45 and 50. It's very possible. If that's the case, then oil's going to go to that 120 range. Our bond market is going to go down and natural gas will go up. So looking at this VIX and seeing what it does, is it going to get to this 45? If it does, equities are going to sell off. Oil's going to 115, 120. Natural gas is probably going to hit 4. Equities, I'm sorry, the bond price for the 10-year is going to go down and yields are probably going to be at maybe 4.3, 4.4. It's possible. So the question is this VIX going to start going down? There's a lot of energy being pumped into this. So see the energy was pumping in, going all the way back to here. The energy's pumping in and getting more, and then all of a sudden this large, same thing here. There's a lot of energy building up, and then it's starting to break out. Now this can go down like this, like you see the energy building up and then it comes down. It could start, we might have some good news on the war effort, comes down to 20, then all of a sudden it spikes to 45. So beware of this kind of dynamic. It's selling down and then popping back up. And if this dynamic is similar to this, we're probably going to see it hit 45. So as I'm talking through this lecture, it's not so clear on if oil is going to go up or down, if equities are going to go up or down. It's such heavily predicated on events in Iran, in that region. Okay, now BOIL. BOIL is an ETF to purchase natural gas. Now, just to go back to natural gas here, natural gas probably support levels 3 for the near term and probably around 3.2, 3.3 for the trading range. But it's heavily predicated on the events, and it probably wants to go down fundamentally, but you have that event risk in Iran. Now, BOIL is longs natural gas. And you notice that going all the way back, right, through February, it wanted to sell down, sell down, sell down. And then the beginning of March, it started to creep back up. All right. Now you could see here in March, it wanted to sell down, sell down, sell down. Right. Now let's go to natural gas. What was going on in natural gas in March? It wanted to sell down, sell down, sell down. So natural gas futures was selling down. And so BOIL, which is a long ETF for natural gas, was also going down in March of last year. Now, it wanted to go down in February, but then the war starts and it's starting to creep back up. All right. So in terms of BOIL, in terms of the ETF for longing natural gas, we may see, we may, we're probably seeing approximately like 17, like maybe over 17 as a support level and a trading range, a resistance level at probably 22, somewhere in there, 17 to 22. And that probably coincides close to about 3 to about 3.3 for natural gas. So keep that in mind. Now, this chart, there's several things going on here. We have the 30-year yield, the 10-year yield, and the Federal Reserve rate, and then the spread between the 30 and the 10. So the 30-year yield is creeping up. All right. It's trading at 4.74, and the 10-year is actually climbing faster, and that's at 4.13. Now, because the 10-year is climbing faster than the 30, you can see that the actual spread is going down a little bit. All right. So it's much more stable for the 30-year than the 10-year. And if news is such that the strait is opening up, we're probably going to see this come down faster. Then the both will come down, but 10-year probably will come down faster and the spread will probably creep back up. And the question is, what will the Federal Reserve do? Now, if the Federal Reserve is concerned about jobs, they're probably going to cut rates. If the Federal Reserve is more concerned about inflation due to elevated oil prices, they're going to keep rates steady. So I suspect that rates are going to continue to stay, at least for the next month or two, at the current level of 3.64. And the Federal Reserve rate is in our range, so keep that in mind. That's probably the median range. Um, and if the yields on the 10 continue to go up, then TYD will continue to go down. All right, so that's the overall of the market. There's a lot of uncertainty because of the news. It's and all of it is predicated on the volatility, and that volatility, that VIX volatility, is heavily predicated on what is going to happen in the region dealing with oil. Will oil flow or not? It's really that. It's all based on that. But it's possible to see a VIX sometime this month or next month getting at the 45 range. And it'll be a major sell-off in the market, in the equity market. But that's a time to buy, not a time to sell. It's time to buy. Buy into the volatility for equities. Now, if you're trading oil, this is not easy to trade through because there's a lot of unknown risk here. Unknown circumstances that can take place. Because sometimes when you listen to the news, you think that the strait's going to open up soon. And then there's other news that comes out that's making you think that maybe the strait's not going to be opening up anytime soon. So it's not easy to trade. Okay, with that, please go to my store, the-studio-reykjavik.com. Help support the work that I do and donate. You can donate through Stripe, PayPal, or buy me a coffee. You can be a paid member to my Patreon channel. All these videos I do for free. If you pay attention to what I have to say, you'll be able to understand and how to navigate through these markets. Now, unfortunately, we're in a situation where at least in the near term, it's 50-50. Can oil go up or down? In the next 4 weeks, most likely oil is going to go down. the next 4 to 5 weeks. There's higher probability of oil going down than up. So with that, please go to my store and get the great supplements I offer to slow down the aging process, boost up that immune system, and to improve your other systems like your cardiovascular health and brain function. Thank you for listening and have a nice day.